let's begin. So, intro to candlesticks. I wanted to do this because I think most of us have a pretty good understanding of candlesticks and how they're formed, but it goes a lot deeper than that, right? So every single one of these candles actually has a story to tell you. So this class, hopefully we can get a little bit into it and you guys understand the meaning behind every single candle. All right, so to get to that point, we have to understand what they are and how they work. So to read the candlesticks, we need to understand how they're formed. So they're created by up and down movements in price, obviously, right? While these price movements sometimes appear random, at other times they're going to form patterns, so that each candlestick will form a pattern, right? That traders use for analysis or trading purposes. Each candlestick includes data from a certain time period. So a 5-minute candlestick will include data from the previous 5 minutes, right? Or for that current minute, and then the previous 4 minutes, so on and so forth. 15-minute will show you 15-minute data. Your 1 hour will show you 1 hour data. Candlestick patterns are found. Patterns found on higher time frames are going to be more prominent than patterns found on smaller time frames. So same with levels, or same with anything when it comes to trading. All the stuff that we see on higher time frames holds a little more value because of the fact that it's on a higher time frame, right? So for example, let's say a hammer candle, right? A hammer candle on a 5-minute does not hold as much strength as a hammer candle on a daily does, right? So like same thing with the I don't know, like a bullish engulfing. On a 5-minute, that might not mean much, but in the bigger picture, that might mean something, right? So when you're doing candlestick analysis, you have to be very situationally aware. So we'll get into that a little bit, but it's going to kind of lead into our next class we're doing, which is on multi-time frame analysis. So yeah. So here's a picture here of how candlesticks are actually formed, right? So a bullish candle, it opens down here, right? And then the close is up here. So this is your body. So price started here and then went all the way here and closed here, right? And these wicks are the highs and lows on this specific time period. So let's say this was a 5-minute candle, right? Your 5-minute opens right here. This is the low that it makes, and then it comes up and closes right here. Or actually, let's say it comes up, hits this high, and then comes down a little, and then closes right here, right? That's how your entire candle is formed. So your bullish candle is obviously price is moving up, and price closed higher than what it opened up at. All right. Your bearish candle is pretty much the same, but the opposite. Your candlestick opens up at the top and closes at the bottom. So price closed lower than what it opened up at. All right. Here's a few different types of candles. We'll get deeper into this. So a doji is a candle that represents indecision between buyers and sellers. So no one really is in control in a doji candle. So if you see like a daily doji at the top of an uptrend, these are going to be reversal candles. So all the candlestick patterns that we go over today are going to be reversal patterns. So dojis are well-known reversal patterns. You open right here in a bullish one, right? You go all the way down, so you make this wick below, and then you go up and you make this wick above, and you close here. So your body is super small, and your wicks are almost the same in size. So this one is one of the candles that it's not telling you much, but at the same time, it's telling you a lot, right? If that makes sense. Your hammer candle is a candle that represents bullish pressure. So you open up right here, we go down and we make this low, right? So at this point it's a fully bearish candle, and then buyers actually buy it and bring it all the way back up and makes a close at the high of the candle. There might be a little wick at the top, there might not be, but for the most part, what you're looking for is a open and a close right towards the high of the candle and a big wick at the bottom, so it literally looks like a hammer, right? So this is gonna show you that buyers are in control here, right? Same thing with the bearish candle, opens up at the top, right? Goes all the way down, makes this low, and then closes up here closer to the top. All right, a shooter candle is take the same concept we applied to hammer, and it's the exact opposite. So this is a candle that opens up all the way down here, right? Gets a big, massive push up to the top, and then comes all the way back down and closes towards the bottom end of the candle, right? There's not really a huge wick at the bottom. Your bigger wick is up top. All right, so this is like an inverted hammer. Same thing with your bearish candle. All right, so here are some patterns that we look for, some that we just went over, and these are real examples. So a hammer is a price pattern in a candlestick, in candlestick charting that occurs when security trades significantly lower than its opening, right? So it opens up here, goes significantly lower, and then rallies all the way to close near the opening price or above the opening price. All right, and you guys can see here we create this hammer candle, and then it is followed by a nice uptrend right after. Bullish hammer, here's your second example of a hammer candle. We're coming down, we form this candle here at the end of this downtrend, right? As soon as you see this candle towards the end of the downtrend, this is your sign that, okay, maybe a reversal is coming. And then this candle goes green, this candle goes green. Right now, at this point, a reversal is pretty much confirmed, right? Because for right here, this was the first higher low and higher high that we made throughout this downtrend. Inverse hammer. This is the shooter that we went over. All right, so this is a shooting star, shooter, inverse hammer, whatever you want to call it. So this has a long upper shadow with little or no lower shadow. All right, so here's a good example right here. So body is all the way down here, and your shadow is all the way up top. Right, the lower shadow is pretty much non-existent there. If it appears after an uptrend, these typically indicate a reversal in your uptrend. Shooting stars indicate a potential price top and reversal. So these are pretty effective when they form after a series of 3 or more consecutive highs or consecutive rising candles. So we see this right here. You can see in this example, we made 1, 2, 3 higher highs. And this was your final and 4th higher high. And we continue down. All right. Here's a second example of your inverse hammer. So higher high, higher high, higher high, and boom, right there is your hammer, and here's your downtrend. All right. Evening star or doji. So your evening star patterns are associated with the top of a price uptrend, signifying that the uptrend is nearing its end. So they consist of a small candle body, just like I showed you guys in the previous slides. A really small candle body with both wicks being almost equal in size. All right, so we're in an uptrend here, and boom, right there is your doji, right? Small body, 2 wicks that are pretty similar in size. All right, showing some indecision now. And here is your downtrend that follows right after this candle. Here is example number 2. We have a nice little uptrend going. All right, boom, there's your doji. Small body, and your wicks are equal in size. And nice dump right after, right? Bullish engulfing. So this is a candlestick that completely engulfs the previous candle. For my strat people, this is a 3 candle. All right. It can be identified when a small candlestick is followed by a large green candlestick showing a bullish trend, and the body of it overlaps the previous candlestick. So here's a good example. You see a small red one and then a massive green one that completely overlaps this one. So this is showing a lot of bullish pressure, right? So you typically, after a candle like this, when a candle closes like this, especially towards the highs, you're going to see some continued pressure in the next few candles. All right. Here is a bearish engulfing, so take the same concept as your bullish engulfing and just flip-flop. So this is going to completely overlap your previous candle to the downside though this time, right? So same concept applies. Typically when you have a candle like this that completely overlaps your previous one and closes here at the lows, you're going to typically you're going to get some continued pressure to the downside. All right, so there's that. Now we'll go into live examples. We'll go over this QQQ chart here. All right, so this is today's chart, and I want to go over some of these candles because some of the concepts we just went over do apply. So first thing is first. Somebody tell me in the chat what this candle right here is. Either type in the chat or you can unmute. Doji. Yeah. Okay, so this could be, I mean, honestly, this could even be, you could even argue that this is a hammer just because of the way that it's shaped. Because this candle close, or the body of the candle, is leaning a little more towards the top end of the candle. Either way, you guys can see one thing is very apparent, is this bottom wick down here, right? No, there's no denying this bottom wick. And what it's showing is price made a move all the way down and then reversed and came all the way back up and closed here, right? So this is significant because we made a whole dollar move down in a few minutes and then right back up. So and this is what we played earlier today. We played calls on this earlier today, but this is showing you bullish pressure, right? So take note of this, and then look at what follows right after is another green candle, and then another green candle for the next 2 hours, or was the next hour rather. We saw a little uptrend, right? We made new highs, filled this gap completely, right? And then check this out. This is when I talk about situational awareness when it comes to analyzing these candlesticks and higher time frame analysis or multi-time frame analysis. So this is the 30-minute. Somebody tell me what this candle right here is. No, not a hammer. The body on this one is towards the bottom end. Yep, shooter or inverse hammer, right? Your candle body is towards the lower end of this candlestick. So this is showing bearish pressure, right? This is the exact opposite of this candle. We made, let me here, I'm going to change this color. I don't like this blue that we're doing. All right, so this candle opened up down here, came all the way up top, and then turned around and came all the way down and closed here. All right, so this is obviously pretty bearish, right? In the if you look at this candle alone, but this is where your higher time frame analysis comes in. For my strat people, what is this? Tell me what this is. Completely unrelated, but I just want to make sure you guys retain this information. Failed 2-2, exactly. This is a failed 2-2 down. We triggered this down at reversal and could not complete. So this is showing bullish pressure, right? You don't see it on this time frame. Now let's go to the hourly, right? This is the candle we're looking at. Let's go to the hourly. Boom. So this looks even more bearish now. This, what candle is this? This is the same thing, right? Same thing that we saw right here. Shooter candle is just more, a little more defined now, right? But if you go back here, your price, it could not make lower lows. So this was the first lower low we make, right? And your first lower high as well through this little uptrend we saw. It was higher highs, higher lows, and then this is your first lower high, lower low. So typically after a candle like this and a red candle that follows, you would expect to see some sort of continuation to the downside, right? But obviously sellers were not strong enough to hold this candle to the downside, right? Buyers bought it back up. This candle here is more of a hammer candle now, right? So this red candle that's supposed to be super bearish after this shooter has now turned into a hammer, right? Price went down here and retraced all the way back. If you look at an even larger time frame, they're all green, right? Your 2 hour, all green. So let's keep moving. Right here, you see your first red candle. Now, if you're one of those people that, you know, breaks down every single candle, especially on smaller time frames, this is why you might want to use higher time frames as well, because while yes, this is a red candle on a 30-minute, on the hourly, this is actually a hammer candle, right? So we're seeing like increased bullish pressure throughout this entire run, because this bearish candle right here on the hourly, super bearish. So you expect some sort of downtrend or some sort of flip and trend, right? But no, this actually is followed by a huge move to the upside. And then the candle right after that, you make a nice healthy pullback, which you can see right here on the 30. And then on the hourly, it's still a hammer, right? Price came all the way down, it retraced all the way back up and closed at the highs. It closed higher than what it opened up at, hence the green candle, obviously. But increased bullish pressure, right? And then you continue on, and obviously none of these candles make a lower low or even a lower high for any signal in a trend change at all. All right, so this is just looking at these, you know, like with nothing on the chart, no support, no resistance, nothing. Now, if you were to flip this around and put levels on here, because this is one way that I play levels and support and resistances. I tell you guys all the time that anytime we get close to a level, to decide if I'm going to play a bounce or a rejection or, you know, whatnot, the one way to tell is by looking at price action. What I mean by that is looking at these candlesticks, right? So let's say, let's do this. So let's say we have resistance right here. Okay. So boom, we have resistance right here. Formed equal highs over here, obviously this high here. But what I want to do is, let's say I want to play this right here. So how do you decide, how do you know when you're looking at this trade live, if you're going to be leaning more towards a bullish run, so like a break over this and then retest and higher highs, higher lows, or are you looking to play a rejection? So this is where reading price action comes in. So you can either drop down to super small time frames to kind of look at this and break it down candle by candle, or you can do a little higher time frame. We'll do both here. So check this out. So we're coming up to our resistance up here. All right, and normally when you're coming up to a resistance, if you're going to break over this resistance, you'll notice that you're going to see increased bullish pressure throughout this run, right? And it'll be a really nice clean break through your resistance, and then you see a retest, and then you see a run, right? You can see over here that the bullish pressure was actually decreasing. So if we turn on volume and we look at volume here, volume's another one of my favorite indicators. We have these two candles that are leading up to this resistance pretty close, right? Notice the volume there. Notice the volume bars, the size. And then you get this candle. So you see sellers are here, right? Like this candle is sellers making a statement. And then obviously we get another little run. And again, look at the volume, right? Compare it to this red candle that we had. All lower volume. This candle had almost no volume here, right? Morning session before lunch, and the candle has no volume coming up to a resistance. So this is already like sign number one that I would be leaning more towards playing a rejection than a break, right? So I would be, as soon as I see this candle here with almost no volume come in, this would be my sign like, okay, I'm going to start looking at puts now. Right, and this candle is what confirms it right here. We make a lower low, right? So we make a higher high and also a lower low. So somebody tell me what this candle right here is. We just went over this one too. There you go, bearish engulfing. Right? So obviously bearish engulfing right at resistance, not a good look, right? Not a good look for bulls or for upside, right? So you see a bearish engulfing, and then following the bearish engulfing, we see this candle. What's this candle? Shooter, inverse hammer, same thing, yeah. Shooter candle, right? So you get a bearish engulfing, you get a shooter, and then you get another bearish engulfing. So this is immediately, now I'm like, okay, I got to play downside now, right? So this is what I mean when I say I look at price action. So between volume and the candles themselves, this is mainly what you're looking at. Just look at the sell volume, dude. Look at all these red candles here. Look at the volume compared to the green ones. You know what I mean? If you go up to a 15, you'll see a similar story. You'll see this candle here. What is this candle? This is easy. Hammer. Yep. So you have a hammer candle. Pretty bullish, right? Super long bottom shadow or bottom wick. So naturally we're expecting some continued upside, right? We close at highs. So we're expecting upside. But the candle that follows is red. Right? So this is showing me one thing. This is telling me there was a lot of bullish pressure here in this candle to close this candle out. And then the following candle, sellers actually stepped in, right? Sellers really showed their hand here. If you go to a larger time frame, this is at this candle right here, these two combined. These two combined is a bearish engulfing because we broke the highs and we also broke the lows, right? So hammer candle followed by a bearish engulfing right at resistance. Naturally, I'd be looking for puts now, right? So keep this in mind. This is what I would be looking at if I'm playing levels. Let's do another example. I want to do like a bullish example here. Okay, we can do this. This isn't like as pronounced, but it's there. So we have this support level. All right. So obviously when we come down to support, we're looking to see, what are we playing? Are we playing the bounce, or are we playing the break below support? And are we playing puts once it breaks below support? How do you know? The same way, right? Check out these candles here. This little cluster of candles in this area. What's something that stands out to you guys about these candles here? Bottom wicks, long wicks off support. Exactly, right? So you're seeing long wicks off support. So this is telling you one thing, is that there's a lot of buyers sitting here. So every time the candle goes down here, not once, but 3 different times, every time the candle went down towards this area, it got bought right back up, like hard too, right? We close at highs every single time. So does this surprise me that the next day when we open up, it's a really large green candle right to our resistance? No, right? Because look how we ended the day off. These long wicks, or these hammers right off our support, is bullish. So naturally the next day I would be looking to, or let's say if this was the same session, naturally I would be looking to play calls every single time off this general area, right? The risk to reward here is crazy. Like all these longs down here, it would look a little bit like this. So you would long this general area, you're going to keep a stop loss just below your support, right? And you can keep either a conservative stop, or you can keep a stop or take profit, or you can keep a take profit up here at these other highs, right? Either way, they both got hit. But let's say you want to take partials here and then you want to close out your full position here. Either way you want to do it, this is over a 1 to 2 risk to reward, whichever way you look at it, right? So there's like, look at the downside, the potential downside there compared to the upside, right? I would take this any day, right? This is a high probability setup. All right, so there's that. We could do this right here. All right. So we form a support down here. Pretty apparent. Every single time we come down to this general area, these candles get bought up, right? So we have a hammer. We have another hammer. Really nice hammer right there, right? So we're seeing multiple hammers right off of our support. So now, naturally, next time that we come down to this general area, we're looking to take longs, right? These are nice high probability longs. So we make a pullback into this zone now. This is our buying zone. And this is why I use candle closes over if a candle just goes through our level, you stop out. But this is why you use candle closes, because look, this candle went below our level, right? And still we make this hammer and close all the way up here. This candle opens, where's my little brush? This candle opens right here and then ends up going down and closes up here. So this is pretty bullish to me, right? And then again, same thing we just went over in the previous few setups we were looking at. Shooter, right? So you see a shooter candle, you're looking for downside now. This candle here does not make it does not continue as low as you would want it to, right? As low as you think it will after this bearish candle here, right? In fact, this candle makes a slightly lower low, slightly lower high, and then the candle that follows makes a higher high and higher low. So this is telling me one thing. So this little cluster of candles is telling me one thing, and this is not enough sellers are present, right? We just got a really nice bounce off of our support. Not enough sellers present here in this general area. So now I would be looking to long, right? If I didn't long down here, I would long up here. And you can see how it goes and hits resistance. And as soon as we hit resistance, what candle do we make here? What is this? Shooter. Right. So these are the things that I'll look for, right? Especially when you're playing levels, or resistances and support and resistances, supply and demand, whatever you want to, all generally the same idea, but the way that you play them is by looking at price action. What are candles doing? What's each individual candle doing when you get into that area, into your buy zone, right? If you wanted to long down here, there needs to be something that supports your theory. And this bullish candle is the number one thing that's going to support your theory of longs down here. This bearish candle up here right at resistance, this is going to support your theory of going short up here, right? Again, yet another example of why I don't use just a breakthrough, a simple breakthrough. I use closes, right? We broke over, but came all the way back down. So this is something, they make candles like this to liquidate people, obviously, since there's liquidity sitting right above these highs. You know, obviously they're going to try and take liquidity somehow. We know that most retail traders think the same way, so most retail traders have their stops set directly above these highs, right? If this is your entry, if this is resistance, people have their stops set right above here, hard stops too, right? So they go up, stop them out, and then dump, right? Any questions regarding anything we went over? I feel like for the most part, between, at least for the older people that are in here, between the strat classes that I've done, and this, it should really start to click, for at least for candlestick analysis. You know, it's like, especially if you're somebody that uses the strat, this should be really helpful for you, because all of these bearish candles and these bullish candles and stuff, these, you get the confirmation by looking for a one of your combos, right? What's the delay between time and sales and a candle formation? Is there even a delay? No, typically there is no delay. I haven't experienced any delay with time and sales and candle formations. You'll see it's pretty instant. Like if you see some fat order getting filled, you'll see the candle pump up like right away. Or you'll see some really fat order get pulled. That was the case today. I don't know if you guys noticed or if any of you guys use order book. If you don't, we'll actually get into that. That's one of the classes. If you guys use level 2 and tape, I was watching that today, and one of the reasons why we got the pump from here, from this general area, to continue up was there was actually an offer for 1,900 lots. I need you guys to, like, that's a lot of money. We're talking like 1,900 lots. We're talking probably well over 50-60 million dollars. So it was a really, really big order that was sitting, and it got pulled. So when an order like that gets pulled, you see a nice little pump in price, and that's what we saw today. Obviously, I'm not going to attribute all these gains to that one order getting pulled, but obviously it had something to do with it, you know. But yeah. Any other questions? Just want to know if you could go over reasoning behind today's entries. Yeah, let's do that. I'm going to stop the recording.